Investing in bonds can be a valuable addition to your investment portfolio, offering a relatively stable source of income and diversification. To understand why you should invest in bonds, let's break down the key concepts and benefits. First, a bond is essentially a loan you make to a borrower, typically a corporation or government entity, in exchange for regular interest payments and the eventual return of your principal investment. This makes bonds a type of fixed income investment, as you can expect to receive a fixed amount of interest at regular intervals. One of the primary reasons to invest in bonds is the relatively low level of risk compared to other investments, such as stocks. Bonds are generally considered a more stable investment, as they are backed by the creditworthiness of the borrower and typically offer a fixed rate of return. This makes bonds a good option for investors who are risk-averse or seeking a more predictable income stream. Another benefit of investing in bonds is diversification. By adding bonds to your investment portfolio, you can reduce your overall risk and increase potential long-term returns. This is because bonds tend to perform differently than other investments, such as stocks, so they can help to balance out your portfolio and reduce volatility. In terms of practical examples, let's consider a scenario where you invest in a corporate bond with a 5-year term and a 4% annual interest rate. Over the course of the 5 years, you can expect to receive regular interest payments, and at the end of the term, you will receive your principal investment back. This can provide a predictable source of income and help you to achieve your long-term financial goals. To get started with investing in bonds, it's essential to understand the different types of bonds available, such as government bonds, corporate bonds, and municipal bonds. Each type of bond has its own unique characteristics and benefits, so it's crucial to do your research and choose the bonds that best fit your investment objectives and risk tolerance. In conclusion, investing in bonds can be a valuable way to add stability and diversification to your investment portfolio. With their relatively low level of risk and predictable income stream, bonds can be an attractive option for investors seeking a more conservative investment approach. By understanding the key concepts and benefits of bonds, you can make informed investment decisions and achieve your long-term financial goals.